In trading, everyone talks about strategies, about the perfect entry, the clean breakout, the flawless setup. But the truth is, none of that matters if your mindset and risk management are weak. The combination of psychology and risk is what defines a real trader. It's the invisible framework that determines whether you'll survive long enough to succeed. Think of trading as a bridge between logic and emotion. On one side, you have numbers, charts, and probabilities. On the other, you have fear, greed, and human behavior. Most traders build their bridge with weak materials, hope, impulse, and excitement. But professionals build theirs with discipline, patience, and structure. Let's start with a simple truth. Every trade carries uncertainty. No matter how perfect a setup looks, it can still lose. The amateur trader fights this truth, trying to find certainty in an uncertain game. The professional accepts it and adapts. That acceptance is the foundation of a strong mindset. When you combine psychology and risk management, something changes. You stop seeing each trade as a win or loss and start viewing it as a data point in a much larger sample size. You stop judging yourself by single outcomes and start measuring your consistency over time. That's the mental shift professionals make early in their careers. They know that a losing trade doesn't define them. How they react to it does. Risk management isn't just about numbers. It's psychology in motion. The moment you set your stop loss, you're drawing a psychological boundary, a point where your logic must override your emotion. But many traders fail to respect it. They move stops, add to losing positions, or remove limits out of hope. That's not a trading error. It's an emotional breakdown disguised as decision-making. A true professional knows that the stop loss isn't a punishment. It's protection. It's what keeps you alive to trade another day. The goal isn't to avoid losses. It has to make sure no single loss can destroy your account or your confidence. When you understand that, your entire trading psychology shifts. You stop fearing losses because you've already planned for them. You know exactly how much you can lose and still be fine. That clarity brings peace, and peace leads to better execution. Every trade should feel boring, predictable, and unemotional. Excitement means risk is out of control. Anxiety means you're overexposed. Professionals trade from a calm center, not from the adrenaline rush of gambling. They know their edge, they know their risk, and they let probability do its job. Now, let's connect this to mindset. Your emotions are directly tied to your risk exposure. When you risk too much, your emotions spike. When you keep risk small and consistent, you think clearly. It's not magic, it's biology. Your brain's fear response activates when too much money is on the line. Reduce that pressure, and your logic takes back control. This is why traders who understand psychology also master risk. They know that discipline isn't about willpower, it's about structure. They design systems that protect them from themselves. Fixed position sizing, strict maximum drawdowns, daily loss limits. These are not rules of restriction, but rules of freedom. They free you from emotional chaos. The most dangerous phase in a trader's journey isn't when they re-losing. It's right after a big win. Confidence becomes overconfidence. Risk expands quietly. You start to think you've figured it out, so you take larger positions, break your rules, and try to replicate success instantly. Then the market humbles you. That's when psychology and risk collide in the harshest way. The best traders don't get carried away by euphoria. They respect their process even more after winning streaks. They understand that success can make you complacent faster than failure can make you scared. On the flip side, when you're in a losing phase, the mind plays cruel tricks. You start questioning your system, your skill, even your worth. You feel tempted to make it back. That's when revenge trading kicks in. Emotional, desperate, destructive. Professionals don't let that spiral begin. They know when to stop, step back, and reset. This balance between emotion and structure creates mental resilience. Resilience is not about being unaffected by losses. It's about recovering quickly and continuing with clarity. It's what keeps professionals consistent through drawdowns while others burn out. The fusion of psychology and risk also determines how you perceive opportunity. Most traders see opportunities everywhere and want to take them all. Professionals filter. They know that trading less often, but with precision, yields better long-term growth. They're not here to trade every move, they're here to trade their edge. And that's the essence of a trader's mindset framework. Clarity over chaos, discipline over emotion, consistency over excitement. Once you master this combination, trading becomes less of a roller coaster and more of a process. You begin to appreciate the calm days, the patience, the waiting. You start to see that your true success doesn't come from predicting the market. It comes from mastering yourself in every condition. Every loss becomes data. Every win becomes feedback. Every day becomes an opportunity to refine your system. That's how growth happens, quietly, methodically, with intention. So ask yourself, are you managing your risk, or is your risk managing you? Are you trading your plan or your emotions? The answers to those questions reveal more about your trading future than any indicator ever will. If you've been struggling with inconsistency, start here. Reconnect your psychology with your risk management. They're not separate skills, they're two halves of the same whole. The stronger the connection, the steadier your growth. Because at the end of the day, trading success is not built on finding the perfect setup. It is built on mastering the mind that executes it. If this video helped you see trading from a new perspective, drop a like, subscribe to Therapy Trader, and comment Mindset plus risk equals freedom. In the next video, we'll take this framework further, exploring how to design a trading system that aligns perfectly with your psychology, your risk profile, and your lifestyle. Until then, trade smart, stay grounded, and remember, your edge begins in the mind.